In today's video, I'm going to teach you how to find undervalued stocks on Finviz. We'll use Finviz's stock screener to quickly narrow a huge market into a focused list of candidates that may be trading below their intrinsic value. I'll explain why each setting matters so you can make smart adjustments as you go. First, head to finviz.com, log into your account, and click the screener option in the top menu. This opens the main filtering workspace, where you can combine descriptive and fundamental criteria. Think of it like building a funnel. We start broad, then layer on quality and valuation checks. Begin with the descriptive filters. Set the exchange filter to include NASDAQ and NYSE. These are the largest U.S. exchanges, offering better disclosure standards and more consistent liquidity, which makes screening results more reliable and easier to trade. Next, set average volume to greater than 500K. Liquidity matters because higher average volume typically means tighter bid-ask spreads and less slippage when entering or exiting a position. It also reduces the risk of a price moving sharply on small orders, which can happen with thinly traded stocks. Now switch to the fundamental filters. Set the P/E ratio to less than 20, or generally low for the sector you're exploring. A lower P/E can signal a company is priced conservatively relative to its earnings. Keep in mind that P/E norms vary by industry and market conditions. Growth sectors might justify higher multiples, while mature industries often run lower. Then set price to book to less than 3. Price/book compares market value to the company's net assets. A lower number can indicate you're not paying a steep premium over the firm's book value, which is a classic measure in value investing. Optionally, add price to sales below the industry median. This compares valuation against direct peers, helping you spot companies that are inexpensive relative to what they generate in revenue. It's a useful cross-check because revenue can be less volatile than earnings for some businesses. You can also optionally set country to USA if you want to focus only on domestic listings. This keeps your universe consistent in terms of accounting standards, regulations, and economic drivers. With these filters applied, review the resulting list. Scan the tickers, sectors, market caps, and the valuation columns to ensure the companies meet your thesis. Look for consistency across metrics rather than a single standout number. Be cautious of value traps, where ratios look cheap due to one-off events or deteriorating fundamentals. Use this list as a starting point for deeper research and adjust thresholds if you're getting too many or too few results. That's it. Your Finviz screen for finding potentially undervalued stocks is ready.